Welcome back, traders. So today we're going to be discussing ETFs and how do we trade them, how can we use them to our advantage, and the benefit over the long run. So before we jump into all the chart work, I'm going to explain to you the definition of what an ETF is. So an ETF is a financial security, such as stock, that tracks an index, a commodity, bond, or a basket of assets like an index fund. Unlike mutual funds, ETFs trade like a stock on a stock exchange. The ETF owns the underlying assets and divides ownership of those assets into shares. ETF shareholders are entitled to a portion of the profits and underlying asset value. So what does that mean? So basically, let's say you're trading in the tech sector, right? And you love the way Apple looks, Microsoft, Facebook, Alphabet, AT&T, all these companies, right? And let's say you don't have enough capital to invest into all these companies in a diverse way. What you could do is you can invest into something like the QQQ or the XLK, which holds a diverse portfolio of these companies. So when you buy one share of this company, you're buying a piece of multiple companies, of all of these companies that's in the XLK or the QQQ. I'm going to give you guys an example of different types of ETFs that you could look at depending on the sector or a type of ETF that you'd like to trade. So what's the simplest way to invest in ETFs, right? So the advantage of ETFs is there's no company specific risks. What does that mean? So let's say we invest into Apple, right? And we're doing great, we're up 10%, 15%, whatever it is. And now Apple releases some negative news on the company. Now the company is going to pull back, it's going to have a red day, whatever the case may be. That's going to affect your overall portfolio if you're only holding Apple. But now, let's say if you invested in the index fund, QQQ, which holds Apple, right? Now let's say Apple has a down day, they have a red day, but every other tech company in the QQQ is going up. You're not going to be negatively affected because you diversified your portfolio and you managed your risk in a diverse way. So now, another advantage is lower management fees, sales charge compared to mutual funds, right? So basically, when you invest in an ETF, you need to pay a management fee. The management cost includes all relevant fees and costs associated with managing the ETF, including custodian fees, accounting fees, audit fees, and index license fees. The annual cost is expressed as a percentage. For example, a 0.5% annual management cost would represent $50 on a $10,000 investment each and every year. So now another advantage is you can invest to go long or you can go short in an ETF. So if you believe the market's going to have a pullback, they're going to have a correction, or they're going to rally, whatever the case may be, you could trade either side you like. You're not limited. And now another advantage is you have access to multiple products like equities, bonds, commodities, currencies across multiple markets and sectors. So with that being said, let's say you're not interested in trading stock. You want to trade commodities, or you want to trade currencies, you want to trade bonds, mutual funds, leveraged ETFs, stuff like that. You could do that by investing through different ETFs. Now let's go to the next page. So now the different types of ETFs, there's market index ETFs, there's sector and industry ETFs, bond ETFs, foreign currency ETFs, commodity ETFs, inverse ETFs, and leveraged ETFs. So each of these, they're all ETFs, but they specialize in a specific field that you can invest in, whichever fits your investment style, right? So now let me give an example of a sector industry ETF. So there's material, energy, financial, industrial, technology, utilities, consumer staples, consumer discretionary, and also healthcare, right? So let's say you're interested in the tech sector, but you don't want to invest into a specific company. What you could do is you can invest into the XLK. They only hold, I believe, about 50 to 70 companies in their index, but it's for a decent price. I believe it's around the $50 to $60 range. If you look at the QQQ, on the other hand, that's about 270 to 280 right now. You're getting you're getting more bang for your buck pretty much. So in the QQQ, it holds more holdings and stocks than the XLK would. So that's just one example. Let's jump to the next. So let's say if you're looking at a commodity ETF, a commodity ETF invests in physical commodities such as agricultural goods, natural resources, and precious metals. It could be focused on either a single commodity or track the performance of a commodity index. So, for example, let's say you want to trade gold. You could either choose to invest in a specific gold company or a specific gold fund, or let's say you want to invest into multiple companies that deal with gold, right? You can invest in the GLD. Let's say you believe oil is going to go up or down, whatever the case may be, whatever your perspective is. You can invest in the USO, that's the United States Oil Fund. Hence, you don't want to invest into one specific oil company or gas company, you could invest into USO. And you get the point for the rest of them. If you want silver, you don't have to invest in a single silver company. You can invest into the silver ETF, which holds multiple companies in one ETF. So now, what are the QQQ holdings? You hear me talking about the QQQ, but I'm not showing any holdings, right? So right here on the right side of the screen, this is everything. Oh, well, not everything. This is the top 25, as you can see, holdings in the QQQ. So I'm not going to list them all, but you can see them all right here, right? Top tech companies. And on the right side, it gives you the percent weight that they have on the overall portfolio of QQQ. It gives you the price of the stock that's in there, and it gives you the percent change, obviously. So now if we come over here, we see the sector weighings in a percent form. So there's 0% basic materials companies in this ETF, but we have consumer clinical. We have 2% financial service. We have no real estate. We have consumer defensive. We have some healthcare. We have mainly tech and a lot of communication services such as phone companies, stuff like that. So now let's look at the SPY holdings, right? SPY is honestly my favorite ETF specifically because it mirrors the S&P 500. The QQQ mirrors the NASDAQ composite, and the SPY mirrors the overall market of the Dow Jones Industrial and the S&P 500 as well. So let's take a look at the holdings that SPY holds. We have Apple, Microsoft, Amazon, Facebook, Google. We have all similar stuff that's in the QQQ, but we have a different variety as well, simply because QQQ is mainly tech. SPY is not. Now, if we come to the next page, we can see the sector weighings on SPY. So now we can see we have a lot of consumer clinical, financial services, some real estate, some consumer defensive, healthcare, utilities, tech, industrial. We have a little bit of everything in here. You see, but if we go back, the QQQ did not. It specialized in a couple sectors, right? Not too many. The SPY is more diversified for your portfolio. So now now let's jump into some chart work and let me show you some. All right, let's get into some chart action now. So we're going to do some ETF comparison here with individual stocks that are in those ETFs holdings. So for instance, Apple, you see here, that's in the QQQ. That's one of the QQQ's holdings. Amazon, that we see here, is in SPY. So that's part of SPY's holdings. So now let's take a look at how they most likely mirror each other, right? So this is a chart on the 90-day 4-hour and Apple on the 90-day 4-hour. And if we take a close look, we could see they pretty much mirror each other. So look, QQQ made a high, right? 304, pulled back down. Apple made a high, pulled back down. We rallied up, pulled back down. Rallied up, pulled back down, pulled back down. You see, so pretty much mirrors itself. Look, hit a support, found a zone, hit a support, found a zone, rallied its way back up, created a peak, hit resistance. Same thing happened to QQQ. Traveled its way back down, hit that support. What did it do over here? It's looking to hit support again. See, so now let's look over at SPY. We see the same thing happen. Let me zoom out. Okay, so look, we rallied up nice. Make sure it's on the 90-day. Yep. We rallied up nice, boom, boom, created our high, fell off. Same thing, fell off. Rallied up, pulled all the way back down. Rallied up, boom, pulled all the way back down, found support. Rallied all the way back up, created this high too on Amazon, boom, pulled back down. Also, SPY pulled back down. You see how they correlate with each other in a sense, right? So now let me show you on the market index screen exactly what I'm talking about. So let's say I'm looking to trade QQQ today, right? I'm going to look at QQQ, and now what's going to tell me if the tech sector is going up? I'm going to look at the NASDAQ composite, which you see here, which holds the top tech companies, right? The overall market for tech. So now if we look here, we see that they mirror each other again in a sense. So take a look. We're traveling up, boom, we're rallying. We rally, we reach our peak. They both hit their highs, come back down. Let me zoom in a little bit so you see. It's not a better view. So look, peak up, hit a resistance, come back down. Now we started to trade in a range a little bit. Boom, we had a double bottom, rallied up, same thing. So they pretty much mirror each other. So if I'm looking to trade QQQ, this is going to be my leading indicator to see what the strength of the overall market is, as well as the Dow Jones overall U.S. stock market index, right? So now let's take a look at the SPY. The SPY follows the Dow Jones overall market as well, but moves more so closely with the S&P 500 because that's what SPY follows, right? The S&P 500 ETF Trust. So we could see that it did the same exact movement. We traveled up, hit our high, come out. Traveled up, boom, boom. Look at this. Mirrors it, comes up, rallies up, drops off. Found its support, right? Rally back up, dipped off. Kind of has that mountain shape, see? It's like an upside down V. See? So basically, again, if I'm looking to trade SPY, I'm going to use the Dow Jones overall market index as a leading indicator as well. But now let me show you what I would do if I'm looking to trade a specific stock. All right, so if I'm looking to trade an individual stock, this is going to be one of the three screens that I use specifically for this video. Since I can't include all three of my monitors on one screen, I'm going to show you in three different screens. So if I'm looking to trade individual stock, right, let's use Apple for an example. I'm going to have it on left side, QQQ in the middle, and the composite on the right. Why? Because Apple follows the QQQ follows the NASDAQ composite. And as you can see again, they all mirror each other, right? They mirror each other pretty nicely. So let me come down to the 5-day, 5-minute. 5-day, 5-minute. And the 5-day, 5-minute. So as we can see, again, even in the intraday chart, they mirror each other, right? So now with that being said, if we were here for market open, we could see we had a sell-off in Apple. QQQ had a sell-off and the composite had a sell-off. But what I would be looking at first is the composite to see what the strength of the market is. What's the overall market sentiment? What is the speculation of other investors, right? So basically, they had a bullish overview on today, sold off in the morning, sold off, and you could tell how the rest of the day went, and it mirrored each other, right? So let's just say, for instance, I was looking to go short in this position. So now what I would do is I would be looking at the overall strength. As we've seen, we had some bearish strength here. That's good if we're looking to go short. So what I would do is I would come over to my triple screen trading system. On another monitor, I would have this. So let's just say we had Apple. So let me just put on Apple really quick. We have Apple and we have Apple. Okay, so now I would look at Apple in the 5-minute, the 15-minute, and the 1 hour, while I'm still looking at the other screen that I just showed you on another monitor as well. So I never keep it out of my sight. So now if I'm looking at Apple, the reason why I keep three screens on is because I'm looking at the strength of the market in the 5-minute, the strength in the 15, and the strength in the 1 hour. But this is the basic overview of how I would trade this. But I'm not saying that this would necessarily work for everybody, because what may work for me may not work for you, right? And vice versa. So now let's say I'm going to execute on this trade. I'm going to come to my execution screen, which is right here, where I have my 1 minute for execution to see exactly where price is at. I have my active trader to get in and out of trades fast and efficient. I have my time and sales to see the bids, the ask, and level 2 to see the bid and the ask, right? So this is my execution screen. In another video, I'm going to wind up getting into my indicators that I use, such as the MACD histogram, the volume average, and my moving averages, because those are the only indicators that I use and that I find effective for me. So if you guys like this video, please give it a thumbs up, subscribe, and turn on post notifications. Have a blessed and successful day.